Sophia, do we have any idea of to what extent Didi was communicating these risks with shareholders? Was this present, or was this a surprise when we learned of the crackdown over the weekend?
Well, as you can see with the share reaction today, the stock down as much as 28% in pre-market trading. It was definitely a surprise for investors who bought into the IPO. And let's not forget, Didi is not a small company. Its IPO was $4.4 billion US. This is the second biggest IPO of a Chinese company in New York since Alibaba in 2014. And what we're hearing from talking to people here is that the Chinese regulators were talking to Didi at least 3 months before its IPO, saying, delay the IPO. We have concerns over the data, the security of your data. So Didi did know that there was a review going on. It went ahead because it wasn't actually in breach of any rules.
So, Sophia, when do we have clarity, right, from Beijing what exactly they want? If you're a U.S. investor, you don't want to get into a Chinese company. If you're a Chinese company, you probably don't want to list at the moment.
Yeah, exactly. New York is a very attractive place for Chinese companies to list. There is a very deep pool of capital there. Valuations are much higher. And if you just look at the performance of U.S. stock markets, they do so much better than China or Hong Kong. But for, the concern for Beijing is that it doesn't have rules in place. It needs more time. There isn't a regulatory framework. This new rule, cybersecurity rules, the body only really came into effect a year ago. So this is all very new for China. It doesn't really know what to do with the vast amounts of data that these private companies control. And if these companies are then selling shares to investors, they're in the hands of foreign international investors. That is another problem for Beijing. It just needs more time to figure out how it can control, these things that are very important for national security in China.